FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue our pattern series, guys, this is going to be video number 2 out of the series. So I hope you guys are enjoying or enjoyed the first video of the series. So let's go ahead and continue on. In this video, we're going to go ahead and fully break down type 2 setups. All right, so if you like this content, guys, if you'd like me to make more different series about different topics, let me know in the comments. Please like the video and subscribe to the channel, guys. And without further ado, let's get this started. So patterns and timing, guys, the two most important aspects of the strategy: patterns and timing. If you can't identify the pattern and you cannot identify it in the right time, you're not going to be able to trade the strategy. Now, the characteristics of a type 2 pattern are very similar. The only differences is we're going to move these boxes down here so I can show you. On a type 2 pattern is basically when price essentially gets stuck at the high, at the initial high of the Asian range, or at the initial low of the Asian range. Okay, so essentially what you'll have happen is you're still looking for an M, or you're still looking for a W. You're still looking for the same thing, but essentially how it presents itself is just different. So basically you'll see something where you'll have an M formation like this, okay, and you'll basically be looking for the same thing, right? It's just an M pattern, but where the tops happen, the tops get stuck. It seems like it hits a brick wall when it gets to the initial high or the initial low of the day. So that's really the only difference between a type 1 and a type 2. Type 1 moves outside of the box by 25 to 50 pips. And type 2 setups, they don't do that. They stay actually at the very top. Okay? So you'll have definitely the same variation. So it could be the first leg just outside of the box, second leg inside of the box. You'll get the first and second leg inside of the box like that, right? Just like a type 1, same scenarios. You'll have where the first leg happens still during the London, second leg will come back during the US. So same scenarios with a type 2 as a type 1. Now, there is a third option that could present itself, but again, I don't want you guys to really worry about it too much because it doesn't happen very often, right? But it does happen. So that particular one essentially it's called trading out of the edge, and all it is really is basically you have your first leg happens inside of the Asian box, and second leg happens like this, like that. But this doesn't happen very often. All right, so the same thing essentially with the W is you could have a first leg like this, go back up like this and come up. You could have the first leg here, second leg here like that, or you could basically have first leg, second leg, W. Same exact thing as a type 1 setup, But again, the main difference is where the pattern stops. And like I said, it just stops at the bottom or stops at the top of the Asian range. So type 2 setups, of course, we're looking for essentially price to stay or go to and still stay at the high or the low of the Asian range. So here we have, of course, the Asian range, and essentially we're looking for the price action to stay either go essentially to the high or go to the low, the initial high or low of the day, and it just basically stays there and creates either the M or W pattern that we're looking for. Okay, so as this starts to develop here, we'll see it's a 17 pip Asian range, and essentially you'll start to notice here that we start to basically ride the bottom of the range there. And as you look at each individual candle here, you'll start to see the big push down, and then they push back up again. Again, with the importance of essentially just waiting for the candle to close, because you just don't know how each of these candles is going to close or what market makers essentially are going to do. But you can see here, essentially, we would have a first leg here. Price comes up to the middle of the range, gets reversed. And then here you can see them marking essentially the second leg. One thing that I want you guys to notice about this particular example is how you see that basically price is not exactly right at the bottom of the range. You see how it's past a little bit of it. So just keep that in mind, that can happen. But essentially we're still looking for the same thing. We're still looking for a W. Okay, and so if we can get that, that's all that matters. And so here we go, and essentially that is a really good type 2 setup, and that thing's still going. It's about a 93 pip just in the US session alone. It's a 93 pip range. Ridiculous move. Okay, but the importance of this pattern, and just knowing that you have to wait for the second leg, right? The same rules apply, right? We can still have basically this like that, right? We can have that. We can have like this one, which is basically both of them inside of the box. Most of the time that's what you'll see. I don't see, very rarely do you see something like this where that happens in the US session. Typically we only get a pattern where it's second leg in the London box, or what you see here like this. Okay, so I'm going to go ahead and show you some couple more examples of type 2 setups, so we can know exactly, again, different variations on the pattern, and we know exactly what we're looking for. All right, so on this particular example, what I want you guys to see is a couple of things. So we got a 12 pip Asian range, okay, and as you can see, essentially we potentially have what looks like here, first leg moves down to the middle of the range, and then it comes up to the top, right? You see how that high holds, basically, and then boom, you get the move here. Now here is one of the, I think, one of the bigger problems that you will encounter with type 2 trades is that essentially when this goes, this range here by itself, let's say, was about 22 pip range. Again, you're in the US session, so it's typically about what you're going to get. But the bigger picture is you see that basically we really didn't move nothing crazy, nothing too much, right? So you see that essentially we pretty much, you got a type 2 pattern, but you can see that it still stayed within a range of about 30 pips or so the entire time for all 3 sessions. Okay, so these things will happen, and they typically essentially going to happen with the type 2 setups. So one thing to be definitely aware of that there will be times when you take what looks to be a very good and type 2 setup, and then this will end up happening. So of course you're going to encounter some losses, and that's completely normal, and this is where these losses might come in. All right, so here is another example, and as we play this out, you'll see the number one common theme, guys, that you're going to see a lot in some of these is the Asian range being very small. And what I mean by that is the Asian range being smaller than 15 pips. Anytime that you see that kind of a range, ideally the pattern that you want to trade off of that range is a type 1. The reason is literally for what you're seeing right now, which is each candle for the most part is almost the entire range, right? So you have a full candle, half a candle that takes up half the range. So it makes it very difficult to distinguish a type 2 or a type 3 pattern. Okay, so one of the things that I always do is I always encourage everyone that if you are in an Asian range of 15 pips or less, ideally you want to be able to go ahead and trade only type 1 patterns, just because they become very clear. I wanted to show you this because, again, I just wanted you to see the different variations of these are the ones that get stuck. A lot of traders get stuck in, and they get them trapped going long, going short, and then you get frustrated essentially because the market is doing nothing but moving sideways, and essentially it was just setting up for this right here. You see how at the opening of the US session it tagged the low one more time and then it moved up. But ideally, this is not something that you really want to trade in, because you're just going to be stuck going back and forth, back and forth, back and forth. And at the end of the day, it's just really not worth it. There are other pairs, and there are, I'm sure, way better setups than this on this specific day. All right, so here's another example of a type 2 setup. As you can see, we're coming out of the range. This time we got 20 pip, almost a 21 pip range. And as you can see, we're basically working the middle of the range here. And you can see basically we have one leg right here. And then here's the second leg, and then we'll work our way down. And you can see it actually came back up one more time, hit it again. But you know that you're in the right trade essentially, because that high is being held. Okay, that high is being held, so you know you're in the right side of the trade. As long as that high is held, you're good. But again, you have essentially a 20 pip range. You're basically bouncing from the middle of the range back and forth, creating the M pattern. Second leg, you're inside of the box, so you're good. All right, so in this example here, we'll play this out, and you can see basically that we have price move out of the box, stays right here within 1 or 2 pips of the bottom of the Asian range, goes right back up to the middle, pins the middle, comes right back down to create the second leg. And you can see the spikes go down, come back up, go down, come back up. You see how I have this line here, that low is protected essentially. And there's your second leg of the W inside of the green box, the green London box. And then essentially price just basically just takes off from there. And then the final one that I'll show you guys for type 2 setups, here we go from the Asian range, 19.5 pip range. As you can see, basically we are essentially moving sideways straight across. We finally essentially get some pins here to the middle of the range, and then we're basically just looking for this right here, this move all the way back down. So essentially we had the first leg here, came back up, came back down, and then now we're basically looking for the buy, which is right there. Second leg, railroad tracks. So that is a type 2 setup there. All right, so those are your type 2 setup, guys. Examples. I hope I've given you some different variations there. All right, guys, welcome back. I hope that you enjoyed this video. I hope it provided a lot of value for you. Guys, if you want to see more content like this, again, please like and share the content. Let me know in the comments if you like what other different topics you would like to cover in a small, maybe 4 or 6 part video like this. And just drop it down in the comment, guys, and let me know so I can have some ideas to what you guys would like to see on this channel moving forward. Guys, thank you so much for watching this video. I really appreciate you taking the time to do so. And as always, guys, if you need any more help, please join us on FXM Plus. We have just about another 2.5 weeks to go for the special on FXM Plus, which is getting the Blueprint Summit videos available to those users who sign up within the next 2.5 weeks. All right, guys, if you need any more help, join us on FXM Plus. We have weekly sessions every single week, every single Sunday. We have them Q&A sessions. We talk about the upcoming week and everything like that. You guys can ask as many questions as you want. And most importantly, we're just there to help as a community. Enjoy this week's trading, and always trade safe and trade consistent.